The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host here on TFNN. My name is Darrell Martin, and make sure you're listening to us online at TFNN.com as well, and on your mobile phone, TFNN.mobi. Even when you're away, you can catch the live market commentary from traders 9 hours a day, and replays happening, all day, all night. But that way you can you don't have to ever be away, and you can catch up and figure out what's going on. All right, let's check out what's going on right now. Well, we got a little mixed results here. We got the S&P. It's currently up 7 points. The Nasdaq's down 18. The Russell's up 3. The Dow's up about 58 points on the day right now. Gold is down 12 points, a 1% move right there on gold. Silver is down a little over, almost 1.5% down on the day. Copper, pretty flat, down about a little less than 0.25% at the moment. We got oil flying up $1.61, so really moving right there. And we got natural gas is currently pretty flat on the day. It's up, really flat considering we've had like 4% days multiple times in the last several days. But it's just up about 0.17% right now, so a very small amount. We got, looking at corn, it's up just $1, not a big move there. And we got soybeans down about 0.5%, down 5 points. Euro dollar is up a mere 13 pips. Pound dollar is down 14. Aussie dollar's up 39. Euro yen's up 40. Dollar yen is up 35. Pound yen is up 26 pips. Dollar CAD's up 40. And the dollar franc is up 21 pips on the day. All right, so that gets you your current market wrap. And we did have some news trades last night. So let's talk about that one. I actually put it on before I went to bed. It was sort of nice to wake up to a take-profit trade in the morning there. And I was looking over at the pound. So give me a second. What I'll do is I'll pull that chart up. We'll walk through that trade for you. So that way, I'm always trying to reinforce how to do these step by step. And if you'll practice them, then, you can definitely get these trades down. They're actually pretty simple to do, but they do take a little practice. So, but it's not rocket science, okay? It's just a matter of doing it a few times over and over till you understand the mechanics and the basic math. And there's no hard math here. It's all addition and subtraction. But you just got to understand how it works, how to put it together. And first step, of course, just hop on over to TFNN.com, click on the Nadex banner on the right side of the page. Up the top where it says click on Demo Trading Account. Once you've done that, fill in your username, first name, last name, phone number, email address, and click Apply for Demo. They'll send you a login password in a few seconds, and you'll be able to log in, and you can actually start demoing these trades and learning how to do them. And check out our scanner over on TFNN to be able to get access to that, and it just makes it even easier. There's a lot of extra education there as well. All right, so now that we're past that, let's go in and let's actually talk about the trade. What was the trade? Well, it was based on, like I said, on the pound, and what we were looking at was the preliminary GDP coming out, okay? And I'll pull up a couple things for you here. So we'll put the scanner up here. And so what I do is I go in and if I'm doing a straddle, okay, I always set my risk reward to 1. I set my max risk at 100. And then I'll go down here and I'll select whatever market it is I'm wanting to trade. And I scroll down, and also, of course, I need to buy and sell. And that'll let me see both sides of the trade. And this is a simple profit and loss graph. Price going up, price going down, how much is made or lost based upon that movement. Real simple, okay? And now I just want to find one that, lines up. Basically has the same, it touches right there at the floor and the ceiling. And ideally, I want as much time as possible. So if I'm looking at these long trades here, that's $65 risk. And look how, this is the live price, this shading in the middle. It's in the middle. That's not going to help me. I want one that's just very low risk comparatively. So I'm going to get rid of that one. So I have 3 choices over here on my out of the monies. And if I'm looking at all these, they have pretty close floors and ceilings. And so I can go, well, that one only has 48 minutes. That has 108 minutes. and there's only a couple more dollars risk for another hour on the trade, I'll definitely take that. So I get rid of that one. Now I'm looking at these two. And when I look at these two, I go, okay, 108 minutes on both, $6 risk on both. This one has a max profit of 140. That has a max profit of 290. Why? Well, because this one up here started, it's an intraday. It started at 1 o'clock, went from 1 to 3. This one started at 7 a.m. and goes to 3 p.m. So it's been trading longer, so it's a wider spread. Okay? But they have the exact same risk, the exact same amount of time, the exact same break even. There's no reason to do that trade. And so now I just want to find the corresponding trade. See how it has that low risk, high profit? Now I want to find a corresponding trade on the other side. So let's go down and check out. It ought to be at 3 p.m. with the same ceiling as we have a floor. Floor being the lower strike of that spread. Okay? Ceiling being the higher strike. They're on the sell. And there we go. So check that out. So that now we have a nice, awesome stringer right here. This was only, $14. I wouldn't say do it right now. We do it before news when we expect there to be a big move. But that's what you'd be looking for when you're trying to find that straddle quickly without having to go through the Nadex platform and click, through multiple contracts multiple times. If you're doing this in the Nadex platform, you'd be up here like forex spreads, pound dollar, and then you'd have to be like checking this, and literally just going through each one of them and trying to do all that math. So, anyways, but different things that you can look at, different things that you can check out and seeing what all is available in here. But if you don't want to do all the math, you don't have to try to click in 5 different places. The scanner is going to make it where you can do it instantly. Once you have that piece put together, now let's go ahead and pull up the pound dollar chart. And let's see here. I'll get this one up here for us so that way we can look at it. And we'll flip it on over to the pound. There we go. All right. So now with the pound dollar, then you need to go back and you need to look at that specific time frame that you're looking at. And what that time frame is when the news comes out. Pretty obvious. So I'm going to go back here and go, okay, well, what time was the news going to come out? News was coming out at 4:30. Now, I got in the trade around 11 or 12 last night. Let's see, I can actually look at my order history, and I'll tell you what time I got in. Let's see here. My pound dollar trade, I got in. My entry was 1 a.m. So I guess it would be 12. So about 12 o'clock Central, 1 o'clock Eastern time. And we can maybe bring this down here. We'll just shrink it so we can see one chart instead of having 3 of them on top of each other. Make it a little easier for you to see. And then we go over here. Let's look at the report. Let's see what happened. And let me add one more indicator, though I can always draw. There we go. All right, so once I have that on there, now we're going to go, okay, what was the move? What was the expected move? Well, the expected move was that it'd move about 70 pips, okay, within 2 hours. And so if we go over here and we go, okay, well, at 4:30, right before that, we got to move down here by 5:15 or so. We got about 58 pips. So we didn't even get the full expected move from release to low, but remember, we go high to low, which is what the expectation's built on. We got exactly 70 pips. So, and again, that measurement, when I say 70 pips, it's the expected move. That's the movement expected from high to low. Okay? So, we did get that move. Now, notice how it came on back, up, through the rest of the morning. There, at 7 a.m., it actually started drifting right back up. Well, if I go over and I look at my Nadex account log, I see I put the trade in at 1 a.m. I put my take profits on immediately. Okay, so as soon as I got in, I set my take profit for my 1-to-1 take profit. And I got filled at 5:07. So my take profit order, like if you go in here, literally got filled right there. There we go. So I can actually bring up a crosshair. That'll be easier. Right there is where I got filled. It's pretty much right there at the low of the market. And it wasn't, being super smart or calling the bottom or, whatever. It was literally just playing the ranges and, making sure I'm not being greedy and going for that 1-to-1. And so let me show you how I came up with that take profit, because I didn't have to be there to take it. I didn't have to be up at 4:30 a.m. to actually place this trade. And so that's why these pound trades, a lot of times they move really well. So I've been very impressed with them. And the biggest thing I like is, like I said, being able to put them on at night and just not worry about them. And since it's capped risk, it's not like I have something to worry about. I mean, I accepted the risk when I got in the trade, and I can't be stopped out. So it's just either it's going to hit my take profit or it's not. If it doesn't hit my take profit, I may make some, I may lose some, I may break even on the trade, but you know, it's not an all or nothing. It's not like a binary strangle. These are using the Nadex spreads. So when I got in, the contract I bought was, let's see here, I got the 66.10 to 69.10. So if I drew all these, before I put that up there, I'll draw it on the chart so you can see what it looks like. I did the 7 a.m. contract because the announcement was coming out at 7, and you know, it was 1 a.m. Eastern, and I didn't want to stay up and do a different one, so I just wanted to make it as easy as I could on myself. So I have to shrink this thing way down because it's a really big spread. But again, 66.10, or yeah, 66.10 up to 69.10. And right here, so at 1 o'clock, I put on a trade that was going to go all the way till 7 and go up here to like 69.10. Okay? And that was the spread I bought. And then I sold, spread right below that, right here. And that was the 66.10 down to 63.10 spread. So I bought one above, I sold one below. They both had very low risk. And we'll go into the risk here. Oh, that's a little bright. That cover will wake you up. Let's see here. Just give me a regular something. Okay. All right, so now let's look at what was the risk on the trade. How did I calculate my risk? How did I calculate my, one-to-one take profit on the trade? All those fun pieces that come together. And then I'll zoom the chart back out. There we go. Okay, so on this trade that I put together, to calculate the risk, now the risk is auto-calculated on the scanner for you. So you'll know what the risk is immediately when you put the trade on. Also, if you open an index ticket, it tells you what the risk is. But I need to know what the risk is on the straddle combined to be able to know if this is a good straddle to take. And it's pretty simple. I went in and I put in a buy order for 1.6624, and the floor was 1.6610. So minus 1.6610. That means my risk was 14 pips. Every pip, every tick on Nadex is worth $1, no matter what instrument it is. So it makes it really easy. So I got $14 risk on the upper spread. Now the lower spread, I went in and I sold that one for 65, let's see here, 66, 63.10, 65.94. So I take 1.6594 minus 1.6610, and I have 16 ticks risk on that side. All right, we'll stay there. We'll come back. We'll talk about how to combine the risk and how to figure out the take profit right after this.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. Okay, so what we're going through now is looking at the pound-dollar straddle last night from whenever the preliminary GDP on the pound was released, and it was released at the expectation at 0.7. Okay, so there wasn't a big surprise on it, but it still moves on average about 70 pips. We did get an exact 70 pip high to low move on it, even without the change. With the change, the thing would have exploded. But anyway, so we got to figure, I go and I put this trade on. I have $14 risk on the long side. I have $16 risk on the short side. I can't be stopped out. Doesn't matter if this thing goes up, down, up, down, up, down. It's not going to hurt me either way. My risk will never increase on the trade. I have till 7 a.m. to be right, and the news announcement comes out at exactly 4:30. So I have time not only to allow the news to come out, which I need to make sure I don't choose an expiration before then. Sounds obvious, but I've seen people do it. And then I also need to make sure I take profit. So whatever method you want to use. I've seen some people go for just half. I like to go for 1-to-1. I know some people who will trail. So there's different ways to do it. Preferably, my preference, the way I like to trade, 1-to-1 base hits, one after the other. Okay. So let's calculate out our risk and look at everything on the trade. We got the 16, we got the 14, and so now we need to know, what's the break even. The break even formula is really simple. Add the two together. So 14 plus 16 is 30. And then add the risk from the other side. So plus 14. Well, if I risk $30, I want to if I want a 1-to-1 reward to risk ratio, risk reward ratio, I had to make $30. Well, if the market goes down and I just make 30 on my short, problem is I've lost 14 on my long. So I'm going to net a $16 profit, not a $30 profit. Okay? So $44 would be not only making the original 30 I put at risk, so doubling my money on that trade, but also making back the 14 that I am expected to lose on the long side. Now, it may go back up, and I may get some extra free bonus money. That's cool when that happens. Don't expect it to happen. Doesn't happen often. But when it happens, great. But I need to expect that $14, that long side to lose if the short side wins. So $30 plus the risk on the other side, 14. $30 plus the is what so I need to make 44 pips on my short contract to be profitable. On my long contract, I need to make $30 plus 16. So I actually need to make 46 pips. Okay? And so I look at, what price did I get in at? So I go over here. Now I add this in. Right here. There we go. And I go, well, if I sold the contract at a price of 1.6594, and I want to buy it back 44 pips lower, so minus 0.0044, I want to buy back at 1.6555. So I put my order in, actually got filled on my buyback. It looks like at 1.6552, so even lower, which is even better. And so as the market dropped down, and then I got filled like right over here at 507. And that was just using that 1-to-1 take profit scenario. Okay, so like I said, nothing special, no big insight there, just understanding how far I expect the market to move based on how far it usually does move. And that's why I go over these different stats with you to help you out, help you put that game plan together. Now on the long side, where would I set my take profit? Well, I bought it at 1.6624. So I need to sell it 46 pips higher, so plus 0.0046. And so I set my take profit up there at 1.0667. All right? And that allows me to take profit when it moves on up there, make my 1-to-1. Now, you could add in a couple ticks to cover fees if you want to worry about the, fees that you're going to incur, which is like 90 cents a side. And then when it expires out of the money, you don't pay any fee on the exit. It caps at $9 $9 an order. So if I do 100 contracts on one order on the buy side, that's $9. If I do 10 contracts, that's $9. If I do 5 contracts, it's $4.50. Personally, I don't like to trade to worry about fees. Okay, I mean, if you're doing that, you're scalping for such a small amount. Because there's not imagine going in and putting it up and being up 100%, but you need to be up 101 or 102% to cover your fees, and you lose on the trade because you only got to 100. And I've had trades where I've lost by a tick or two because I was trying to cover fees. And so I found in the long run, I give up some money along the way, but I'd much rather not worry about my fees. So maybe I'm making 99 or 98%, but I'm winning more often than 1-to-1 on these new trades, so it doesn't matter anyway. But I don't worry about the fees. I know some traders who do. So that's sort of up to you on that. But anyway, so we put it on, set take profit, moves down, hits it while we're asleep, wake up, I check, I'm like, sweet. So hopefully you picked up a couple tips on how to do those straddle trades. All right, we'll be back right after this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And we're going to walk through step by step how to do the pound-dollar news trade. So, take some, get those notes, keep them, put in your file for the next time that one comes around. We'll have other pound trades definitely coming up. And you can use these steps to help you out with that. Okay? Let's see, as far as other straddle trades we got this week, we're going to have the, it looks like the FOMC interest rate is going to be coming out tomorrow, and so that way you could trade the euro dollar is my preferred pair. So I went over this one a little bit yesterday. So euro dollar, you'll get straddles or strangles. I prefer the straddles on the spreads, but 95% of the time it breaks 50 pips with an average range of 73. Just really make sure, especially on FOMC, that you are measuring that high to low for that range. Okay. So, if it goes down 30 and up 43 and it's hesitating, you need to be willing to get out of that trade. And also really, really watch your deviation levels. So let me show you over here how, even on this trade, now, fortunately our take profit was already there. It took care of it for us. But on this trade on the pound dollar, notice how it came right down after going up half a deviation, down half a deviation, right where we took profit, it bounced off of it. So, make sure your take profits, look at those deviation levels when you set your take profits on these trades to make sure like don't be right after the deviation. Try to be right before the deviation. Even give up. I'd rather give up a few dollars in profit and be before that deviation level, because I've seen too many times it literally hit it to the tick and bounce. Okay, so looking on over here, next thing we got is we got FOMC euro dollar preferred pair. Pound dollar also moves about 70 pips, so 83% of the time it moves at least 50. So that definitely could be a good one as well. We look on over at the U.S. GDP. So this was the pound GDP we just did here. So on the U.S. GDP, then that's going to come out at 8:30 on Thursday. And so we're looking for a move of, let's see, our best one really is going to be pound dollar. 70% of the time breaks 50 pips, moves on average 72. The next one is euro dollar. 70% of the time it breaks 50, but the average move is about 60 pips on that. So, those would be the two pairs. Just understand that the pound dollar usually moves about 10 to 15 more ticks than the euro does on that trade. And then on Friday, we have another straddle strangle for the dollar CAD GDP, or the Canadian GDP. And so obviously I'll be trading dollar CAD on that one. And but the trick on this one, okay, so I want you to be aware that because this will be rated as really high news, it does move an average of 60 pips, but on average, it only does it 42% of the time, okay? So this really might not be your ideal, trade. You need to have a really low risk on this trade because it's a low percent. I almost hesitate saying it, but I want to also point it out because sometimes people are like, oh, GDP on CAD worked, or GDP on dollar worked, GDP on pound worked. Oh, here's GDP on CAD. I'll do that one too. So I want to bring that to your attention and say, hey, it doesn't break 50 pips that often. When it breaks a lot. So, but you have to use a judgment call on that when the stats aren't really in your favor. So I'm not going to trade it, but I want you to be aware of it. So maybe you decide, not to also, or maybe just demo trade it. Learn from it, watch it. Okay. Now if their GDP is off by a lot, it will move, and that's why you have a 42% of the time it breaks 50, but the average is 60. Because when it moves big. The other trades, you can do butterflies on the binaries before the news, where you buy a strike below, you sell a strike above. You can do this on a lot of news. FOMC is usually very flat. So if we see the FOMC is flat on Wednesday, tomorrow, as I'm doing the trade and walking through it step by step, then I will put some trades on and we'll look at doing some butterflies live on the radio show. So make sure to tune in on that. Then the other big trade of the week to check out is doing, and we'll talk about this one on Thursday, is Google's going to have its earnings release along with Amazon right at the close of the stock market, but the futures are open for 15 more minutes, so is Nadex, open until 4:15. Google and Amazon releasing right there at 4 o'clock, and that can cause a lot of volatility in the NASDAQ, so we can look at NASDAQ binaries to do strangles on that specific announcement. Okay, so that ought to give you, all the, little pieces for the news for the week. And, there's some other earnings, I guess, we can go over to and wrap that stuff up. I just want to make sure you got all your different pieces together. This morning we had Pfizer, it came out on its earnings, so if you're wondering, what's going on with the market, again, always be aware of these, especially the big earnings. We got AT&T came out this morning. We had, Comcast came out this morning. Which ones are coming out tomorrow that you need to be aware of? Tomorrow morning, we're going to have Boeing coming out that affects the Dow at 7:30, okay? And then in the afternoon, you're going to have Qualcomm, which affects the NASDAQ, right there at 4 o'clock, so right near the close. Again, not as big of a mover on the NASDAQ usually, but one to definitely be aware of. And also Facebook, which obviously can be a massive mover, but it's a newer stock, so we don't have a lot of stats to really just fully qualify that as a trade. I'll be checking it out and looking at it, seeing if I see a good possibility on a trade setup. But, so Facebook being released right there at the close tomorrow. So definitely have that on your calendar. And then Thursday morning at 8:55, you're going to have Exxon Mobil on the Dow. And on Friday, you're going to have Chevron coming out there on the Dow at 8:30 in the morning. So that's when the wire release time comes out. And so, or the expected wire release. It's not a published wire release time. It's they'll publish their press conference time. The wire time, you have to look at all the past wires and basically see when does the company normally release it. Maybe they'll release it a minute before, a few minutes later. A lot of them are like clockwork. Some of them are maybe 2 minutes early, 2 minutes late. So, I don't want to be hopping in like 2 minutes before. But just be aware that wire time is usually previous to the actual press conference. Sometimes it's at the exact same time. And another reason that's important to know is like Apple and stuff like that. We talked about this on yesterday's show. Apple comes out after the bell. And, we got some nice big moves on it, but it comes out after the bell, so we couldn't really straddle or strangle that. And it's funny because, I'm watching all these things, and I'm talking to some traders while the trade's happening, and they're like, I think it's going to go up. And I'm like, so does everybody else, so short it. It just, was flying down. And, I was watching that while at the same time I was watching NASDAQ, and, it was just flying down right there. Perfect, moves down. And I was like, if everybody's saying it's going to go up, that usually is a good sign it's not going to. So that means everybody who's going to buy it has bought it. And, their iPhone forecast and all that stuff, like, they were lower than expected. Now, they got a lot of stuff going into China for this coming quarter. So that may really, pick up their earnings and give them a big earnings boost on the next earnings announcement. And that was sort of funny. I was seeing a lot of these articles come across from Goldman and other ones talking about how, they're raising their forecast and their revenue model and da-da-da-da-da for Apple because they got into China. And I'm like, dude, that was a week ago when this stuff got released out there. And so it has nothing to do with the last quarter earnings, but all this positive news, and I'm sure that was done on purpose. But, it had nothing to do with this quarter at all. Or last quarter had to do with this quarter, which has nothing to do with this earning announcement because it has to do with the last quarter. And so, like all this news is not relevant to what's about to happen. Now, of course, I didn't know it was going to go down. It's just I've noticed so many times, the louder and the more I see of the expectation of a stock is going to go up or stock's going to go down on earnings, and if I see this almost unanimous consensus, then it's usually the exact opposite, and that's I don't know basically it's a there is actually a word for it. I've read it in multiple books, but it's basically just a news trading analysis. So it's like if you read on every magazine cover, bull market, bull market, bull market, then get ready for the bear, and vice versa. If you read the world's over and doom and gloom and get ready for the market to start bouncing, that type idea. So it's sort of the same thing, but a little bit faster. And, magazines not being as relevant now. Not that they're irrelevant, but they're not obviously as big now with the internet and being able to pull in all the articles from all the different websites simultaneously and get all the news feeds. Okay, so we wrapped up all of our news reports for the entire week. We're good to go on that. The next thing we can do is let's look at where all the markets are right now. And maybe what we'll see if there's anything that we can specifically do or trade on them as we're flying through them at the moment. So we got the pound right now. We already know it. Went up half a deviation, down half a deviation, bounced back up to settlement. And at the moment, it's moving down over and over. Let's go and check out our indices and pull up the S&P. We had a little bit of a mixed bag earlier today on the indices, so some long, some short. And I'll just push these up here. We'll just focus on one chart, make it easier. So right now we got the S&P after moving on up has pulled on, it started down, moved up, and we got about a full deviation from high to low right there, and right up to the 0.7, but it pulled down first thing in the evening, mainly Apple dragging it down. With the NASDAQ and all that stuff at the same time, pulling right back up, and right now at about half a deviation at the moment. Still long, but, slow. So not moving real fast. And also, it just filled the magnet price. Okay, so we had a big volume spike here on 5 and 10 minutes. It did a pullback on that, and now it ran back up, hit that magnet price, didn't really charge through it. So now we're starting to see some oscillation off that. So a combination of the deviation level, filling that magnet, not breaking through with higher volume, then, it's just, I'm not surprised that it's slowing down. So it doesn't mean it won't keep continuing up. It's just, right now, I wouldn't be all gung-ho about it topping in. You're a little late to the game. So let's check out where some of the others, maybe we get some cleaner signals on some of the other indices. Right here on the NASDAQ. Pull that up here, post Apple, and it's down, obviously, and we moved basically down about a deviation from high to low, and we're also on the minus 0.5 deviation. So it's really the one out of the group. We were looking at that earlier. Out of all of them, Russell's up, Dow's up, S&P's up, NASDAQ's being weighed down. So it's really going to be interesting to see what Google does after that Apple release. And we also got that same volume spike right there, too, on NASDAQ that got filled in already. Let's see. Let's go ahead and check out the Russell. See if it's lining up. And notice, one was up 0.5 deviations, one was down 0.5 deviations, but the charts really mirrored each other a lot. The indices flowed together, even if one may be a lot stronger, one may be a lot weaker. Usually when they're all going up, they're all going up. When they're all going down, they're going down. It's just one may go down more when they all go down. And that's what happened with the NASDAQ. Here on the Russell, we see it's up half a deviation right now. And it's just chilling out right now at that 0.5 deviation level. And let's check out one more. We'll go and check out the Dow. So the Dow ought to look about the same. And there it goes. So the Dow almost to the 0.5 deviation level. It just filled in the magnet, sort of pushing a little higher. So, but we haven't quite got high enough to, trail or stop yet, but it's moving up, up, up. So, hopefully we'll see if the market can hold on to these gains or not. It's these next few days. Just earnings is fun because there's a lot of volatility. Let's go in. Let's check out our gold contracts and oil, because obviously we had some nice moves in oil today also. But we'll check out gold first to hop on over to oil, see where we're at, and just sort of bring you around the world, all things futures, commodities, indices, forex. And so gold right now down almost 1.5% on the day, and pretty smooth downtrend for the most part, and pretty clean on there. So if you're wondering what all these little arrows are, it's just basically how I look to trade. So I'm waiting for it to break the high. Doesn't ever break the high, I don't have an entry. Wait for it to break the low. Finally does. Got an entry to go short. But so pretty clean, smooth trends right there on gold. So, but it's down at about 1.5. Wouldn't expect it to go any lower. And it's also wrapped up for the day right there at 130. Right here. That's when the pit closes. And it's important to be aware of when the pits close when you're trading, futures and stuff like that, because that will impact it. Even if you're trading Forex, the pits close at 3 p.m. Eastern. It does affect the Forex markets right then. And so I've just noticed to be just a little more cautious when I get closer to that pit close, because you can get some quick little, trend changes. All right, so oil flying up today, so very positive, but ran on up, and we hit the 1.5 deviation level there, moved on up, and it's just paused at that level, and we got some volume spikes back and forth, pretty choppy, basically just been on that 1.5 deviation level for 2.5, 3 hours almost now. So there's not a lot going on, but it was a great move in the morning. Just a stellar, perfect trend this morning. And we'll check out, go into our ags. So right now they're pretty flat on the day. Let's see if we had some movement intraday. So sometimes those numbers don't really show the whole picture when they just, the corn was up 2 points. Well, what did it do intraday? So sometimes it's a big move. Yeah, it's just pure chop, nothing. So nothing happening at all on corn. And, I love the ags. When they don't move, they'll sort of be there flat, whatever. And you can trade them on spreads, and if it's chop, it's just chop. It doesn't matter. But if they move big. And then let's see here. Soybeans got down to, a little lower than negative 0.7 deviation. Pulled on back, but nothing just real impressive. Big movers were the currencies, and obviously gold and oil today, along with silver. All right, we'll stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour, and we're just walking through step by step, getting you all set up for your news trades. And I know some of you go, I don't trade the news. It doesn't matter. You better be aware of when it comes out, okay? And I talked to a trader today, and we were talking about this, and he talked about how he's traded for 15 years. And, he's had his winners, he's had his losers, like we all have. But he never really paid attention to the news. And he's realized that, it's not like paying attention to it to go, hey, not watching the news. And I'm not talking about, and he is still not a news trader. But he is now to be aware of when news announcements are coming out. So that way when they come out, he doesn't get caught off guard. And I sort of, like the example I use often is it's like going into the doctor, getting a perfect, healthy, clean bill checkup, but not looking both ways before you cross the street and getting hit by the bus. So it doesn't matter how good your system is, how good your indicators are. When the FOMC is coming out, you better prepare accordingly. So get out, tighten stops. Even tighten stops may not be enough depending upon it, unless you're using something like Nadex with capped risk. You need to be aware when the bus is coming. And it doesn't mean you have to trade it. Doesn't mean you have to, do anything with it. But you want to be aware of it. Because a lot of times you go, what happened? And you have no idea until after the fact. But there's no excuse for that because you can know the news up front. There's plenty of websites, Forex Factory, investing.com. There's multiple government fundamental news websites where you can find that information. so that way you can be on top of the news whenever it's moving. All right. Couple more markets we'll go through. We'll check out just some of our currency pairs here. Check out the U.S. yen. And let's see here. Okay, so on the U.S. yen, it moved on down. We got a pretty solid deviation, high to low, on the trade here. And moved on down. And let's see, did we get... Yep, and then, actually, all the way up to one deviation with a pullback. So now it's moving back up towards the 0.7. But see how we literally went right to one deviation level up here. Broke it by a couple ticks. 103.24, 103.22. Broke it by 2 ticks. Remember, one deviation is what we're expecting each day, is that one deviation move. Breaks it by a couple ticks, comes on back south. And, you don't, and again, that's another thing you don't want to be caught off guard by. Okay, and the deviations are not simply pivot levels. They're not even simply Fibonacci levels. So, Fibonacci's are awesome. Gartley patterns are sweet. There's a lot of cool things you can do with them, and there's some great setups. But where deviations come into are statistics. It's the price-based statistical formula in options markets telling you how far the market's going to move. And using the market is right. So it lets you know how far does the market, people that are putting money in the market, expect the market to actually go. And so the reason it's called the Diagnostic Trading Hour is because what you're doing is you're looking at how other people look at the market so you can be one step ahead, okay? I know there's plenty of big algo models that look at deviation levels to stop buying. That's why I use that. It puts me a step ahead, okay? I know, and that's where they'll dump off their shares and things like that. I also know that obviously there's plenty of algos and things like that that's going to fire off on news trades. So I want to be aware of those news trades and be one step ahead. I also know that different blocks of traders come in at different times of day. So certain times are going to be much more volatile than other times of day on a consistent basis. That's seasonality. So I can be one step ahead. So then the one part that most of us use is, charts, technicals, and try to clean that up so you can be a step ahead on there as well. But you want all 4 of those pieces so you can give yourself the greatest edge in trading. All right. I hope y'all have a great day, and I will see you tomorrow. Stay tuned. We have another great show coming up for you right after this.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.